folks, Michael Terpin didn't just witness the birth of this industry, he architected its most iconic launches. As the PR mastermind behind Ethereum and Tether and co-founder of BitAngels, the world's first digital crypto angel network, Michael has a decade-long track record of calling the shift before they happen. So another point super important to share, beyond the markets, he is a fighter who turned 24 million SIM swap hack into a landmark legal battle against telecom negligence. Again, thank you, Michael. He joins us today to discuss market mastery and his latest work, Bitcoin Supercycle. Michael, welcome to the Spontané Show.
Thank you. This is the book, Bitcoin Supercycle, available in bookstores and on Amazon globally.
Fantastic. I will share the link of the book. And this is fascinating. Like, you put all this knowledge in this book. And what was the first motivation to create this book, Michael?
Well, really the first motivation is long before, I got involved in Ethereum and Ripple and, and Tether and a lot of the early, altcoins. In the beginning, there was Bitcoin. That's what I, got into and learned about in 2012 and then went all in in 2013. And when I first got excited about Bitcoin, it was about, I remember speaking, and I talk about this in the book, at the New York Angels in front of 100 people in July of 2013. The price of Bitcoin had just dropped from 100, which is what it was when I first got in, actually 120, and it dropped to 66. $66. And I was trying to tell, a group of very, intelligent, savvy tech investors, 100 of them or so, that Bitcoin was this amazing, once in a lifetime opportunity to create great wealth, and that you should be looking to buy some at $60, and nobody did. Everybody thought I was crazy. I only got one question, and that was basically a warning that I should run away from it as fast as possible before I'm arrested. And, I said that I thought that it could go from $60 to $10,000 by the end of the decade. I was wrong. It went to $20,000 and did that by 2017. So, and around that same time, actually a couple of years later, I started just tracking what causes the volatility, right? Because Satoshi had said in his early writings that as long as the amount of new money moving into the ecosystem is more than the new coins being created by the inflation that gets cut in half every halving, the price has to go up. It's supply and demand. It's basic math. And sure enough, he's been right so far. First halving price was $12. Second halving price 4 years later was $670. Third halving was $8,700 in 2020. And in 2024, we were at $64,000. So 4 for 4, every halving, it's gone, always up. And it should continue to do that as long as more people are coming in than the coins that are being issued. And the coins now are minimal. I mean, it's 0.8% of inflation every year. And in 28, that's going to go down to like 0.44, and then 0.22, and then 0.11. So it's negligible, which is interesting because some people say, well, then it means the halving doesn't have any effect because it's so small. No, that's exactly why it does have an effect, because if the amount of demand grows and the amount of available supply does not grow, that's when you get supply shock. And so I was fascinated by the fact that it always goes up as long as, we're only at 4 or 5% of the world that has any Bitcoin, about 8% for crypto, but there's actually a lot of people who have only Ethereum or only Shiba Inu or only Dogecoin. So there's a considerable amount of people who do not have any Bitcoin but have some crypto. So 4 to 5% is the best numbers I've seen for, what percentage of the 8 billion people in the world have any Bitcoin. It's maybe about 400, 500 million. And that's tiny compared to other assets, right? And so what happens when that's 20%, right? All sort of disruptive new technologies that hit scale, ultimately they take forever to get from like 0% to like 5 to 8%, and that's when you have a tipping point. So when we get to say 10%, when we're at 800 million people out of the 8 billion, 20%, that's 1.6 billion out of the, that the world population will grow over the years too. But like, when we're at 1.5 billion people, that's like, 3 times what we have today, but we're only adding to the new Bitcoin by like fractions of a percent every year. Where's that new Bitcoin going to come from to meet the demand? And it has to come from existing owners. And, what happens is that, there's what happens, the wild volatility between the halvings is what I recognize as being fear and greed. Like a lot of other markets, Bitcoin, maybe more so, has a lot of fear and a lot of greed. And I mapped it in terms of, I discovered that this has been every cycle now, and it's gotten stronger and stronger every time. It has not changed at all. There are 4 quadrants within every 4-year cycle that happen in the exact same order and do the exact same thing. And I named them after the 4 seasons of nature. I call them the 4 seasons of Bitcoin, which is the main thesis of the Bitcoin Supercycle book. I called it Bitcoin Supercycle because my publisher liked the name better. And it's one of the thesis points of the book is that eventually we're going to hit supply shock and cause a supercycle. We are not in a supercycle right now. Far from it. We're in the bear market still. We're in till we have a sustainable turnaround from the 200-week moving average. If we hit 80K and stay there for a couple of weeks, then we're probably over the bear. I think that there's probably about a 40% chance now that happened last week when there was all the fear and loathing and drama around STRC, and then Saylor sold Bitcoin and upped his cash amount to $2.5 billion. We hit 57,700 on Coinbase, and I actually said in February when everybody else was saying the bottom is already there at 60 something. That nope, we hadn't hit the 200-week moving average yet. That happens every single time, and we need to hit there. And I said I think that we're probably going to go down to about 57. Well, we've gone to 57. I think that the worst case is we could actually go down into the low 40s.
Yes.
And again, right now we're in the position where if you're able to buy anything below the 200-week moving average, you should do it because there's no guarantee that we're going to hit 40 or 45. Usually at the very bottom, people are looking like they're putting in limit orders at insane numbers. I'm going to finally get $10,000 Bitcoin. No, it's not going to happen. So I would say right now, my own positions, and I run a fund, Bitcoin Supercycle fund. We're about 2/3 cash right now. I'm sorry, 2/3 Bitcoin. Earlier in the cycle, we were mainly cash. I was like, that's sort of like what you want to be looking at. Deploying it as the prices go down. And so that's pretty much what we advise and what we do. And I think that the next couple months is going to be looking to see right now we're probably going to go up a little bit more in July. What's interesting is that 4 years ago we had crashes in February and June, and then went up in July, and then gave back the gains in August, and then ended up having capitulation in the fourth quarter. It was November 4 years ago. It was December in 2018, and the most likely path is to have it in October of this year, which would be 23 months after the initial high after the halving, which was exactly what the amount of time was in 2020, in 2022, and in 2018. So history may not repeat, but it sure rhymes. And that's what the 4 seasons of Bitcoin is about. So those 4 cycles, Bitcoin spring starts the day of the halving. It's when the seed of the new cycle is planted. It's when miners go from being, profitable by and large to being wildly unprofitable. If you're making 10% in one block, you're now losing 40%. So that's when a lot of them, turn off their machines so they don't want to lose money. They'll use that as a time to upgrade to new machines since they're off anyway. That's you'd think that the price would drop during that period, but it doesn't. It stays flat. And the reason it stays flat is that for every miner, there's not that many miners. For every miner, it's selling Bitcoin, and more and more they have cash reserved for this because they know the halving's coming, so they don't have to they have no savings. For every miner that is selling Bitcoin, there's someone else that looked at the cycles and said, oh, it goes We just had a halving. It's going to be higher next halving, probably by a lot. I should buy some. But they don't buy in great numbers until they hit a new all-time high. And, at the bottom of the bear market, you think you're never going to have a new all-time high. Oh, my God, we'll never see 120 again in 20 years. But it's actually the shortest of the seasons. It's between 4 and 7 months. The first time after the first halving, it only took 4 months to get to the old all-time high of 30. And 4 years later, it took, I think, 5 months to get to the all-time high of like 1,200. And then four years after that, it took, I think, 6 months to get to the old all-time high of 20,000. And then, this time it took 7 months. And so it's gradually growing. The time of Bitcoin summer doesn't mean it'll always grow a month every time, but it's been the history. And then Bitcoin summer is real simple. It's when you get to a new all-time high after the halving. So if the halving price, which it was 63,900 in April of 2024, you just had to go and beat the high of the last cycle, which was 73,800. And when it happened a month before the halving, everybody's like, not everybody, a lot of pundits were like, oh, the halving's broken. We had the first time there was a new all-time high before the halving. It's all broken. It means nothing now, or it means we're going to have a left-facing cycle, is I think what Benjamin Cohen called it, and that we would have a very, very early bubble top. And we didn't. We had it basically about where it should have been, which was 35 months after the prior bottom. And, so far, right on schedule in terms of when the bubble popped and where we are in the cycle right now. So that's Bitcoin summer. It happens the day of the new all-time high, even if it's by $1, and it goes up like a rocket ship for a couple of weeks. It's a great time to buy Bitcoin. And then it usually simmers out, sputters out a little bit, has usually a correction where it goes down in the middle of the 9 to 12 months that the summer has historically been, and then goes and has a parabolic top. This time it did not have a parabolic top. Some have said it topped on apathy instead of euphoria. But I think also you had a black swan just a couple days after the top at 126 and change. You had this black swan called 1010, where Trump tweeted out about the tariffs that scared people, but seemed like a lot of people took advantage of that or knew about it because Binance immediately started selling, and they deleveraged their market makers so that they could only go long and not short with leverage. And it was just this cascade of things that tumbled the price down. And then once it tumbles to a certain point, the charts take care of itself, the rest, by just automating, sell orders and shorts and things like that. So that started the bear market. And then that ends in what I call Bitcoin fall. So Bitcoin fall is the day that you hit capitulation. We hit it 4 years ago at FTX. A lot of times you think the bottom's in, and it's not. And usually the bottom has never been with a V-shaped recovery. Like when people said the bottom was in February, I was like, no, because it dropped to 61 or whatever, and then the next day it went up 10%. That never happens at the bottom. The bottom never is like, well, that's it. FTX, crypto's done, Bitcoin's done. Elizabeth Warren's going to arrest everybody, shut down all their wallets. It'll be illegal to own Bitcoin anymore. And I'm selling if you're not a diamond hand. And that happens every 4 years. 4 years early, it was left up. Craig Wright is really Satoshi, and he's killing everything but SV. Sell everything. And then 4 years before, it's like, Mt. Gox is dead. Everything's going to zero. It's interesting how the bad news happens at the exact same time in the cycle. So I think the cycle timing actually causes the bad news, because Mt. Gox might not have blown up if it wasn't for Bitcoin crashing like 80-something%. And FTX probably would have been able to keep their Ponzi going longer if they hadn't crashed by so much. And, and here, MicroStrategy, they did not go under, and I think they had much better reserves by far. Same thing with STRC. But, oh, my God, the short sellers are out. The fund was in. Oh, it's going to bring Bitcoin to zero. You better sell right now. I mean, to me, it was amazing that STRC, which I'm an investor in, and I'm still getting, 12% at the $100 that I put it in. I have no worries that it's going to eventually get up there, even if they have to raise the rates a few more times. As soon as Bitcoin is back to 80, 90,000, why would you not put it in? I mean, it survived the bottom. And, if I had more spare cash to put in, I would have bought more at 75, because at 75, you're still getting paid as if it was 100. So you're getting 16% interest that they have, like, if Bitcoin dropped to 30K, they still have 5 years worth of Bitcoin to pay the dividends. And so, that's just silly that the short sellers were able to get so many people scared that it went down to 73, I guess, and then it went back up to 90 when he said all is good. Now it's kind of bouncing between 85 and 90. And really, it wasn't so much there that was panic. It was also the short sellers being squeezed. Sorry, the people who saw the 12% got greedy like they did in the Japan carry trade. And they went in and said, oh, if I go and leverage it 5 to 1, I'm going to make 60%. And they did, and then they didn't realize that, like, it could go below 100, and then they got margin calls and they had forced selling. So that's what happened there. And so so that takes us through fall. Fall basically starts a capitulation, and it ends. It starts at the bubble popping, and it ends at capitulation. And then winter is not so-called crypto winter when everybody's depressed, and there's no other explanation other than that. My Bitcoin winter is very decisive. It starts the day of capitulation and ends at the halving or the new all-time high, whichever happens first. And this last time was the first time that you actually had a new all-time high. I'm not quite sure what to call the season between the new all-time high and spring. It's kind of this never land where really spring happens the day of the halving. And but winter ends if it's a new all-time high. So Indian summer, something spring, I don't know. But it's just kind of like, it's this new season that maybe we have 4.5 seasons going forward. But and where you make all your money, if you're not going to just buy and hold forever, this is the thesis of the book and the fund, is if you can properly, because when spring starts, it's on the calendar. It's going to be in late March, early April of 2028. It's every 210,000 blocks. No guesswork there. You can see it very clearly coming. We know it's happening. You can tell when Bitcoin's summer starts. You can tell that by a calculator. Is it $1 higher than the old all-time high? Okay, Bitcoin summer just started. You should be buying. But it's much harder to tell the start of Bitcoin fall, which is to actually guess when it's the high and the bubble popping instead of just another fake out on the way to a higher high. And it's also hard to tell when capitulation actually happened. Was it 2 weeks ago, or do we have another few weeks? I can't tell you with certainty. I think it's about 60% chance that we're going to go lower and 40% chance that it's already in. I was more certain in February because I didn't think it was going to be the first time ever that you had a capitulation with a rapid recovery and the capitulation without hitting the 200-week moving average. But now we're getting into niceties, and if you're buying, nobody's going to be crying if they bought things at an average of 65K and it goes up to 200K in 3 years, right? It's going to be a rounding error, about a 57, 65, 50. A nice rounding error, but still a rounding error. So, and so that's the 4 seasons, and that's what the book's about. That's what the fund follows, and that's what if you go and just simply, if you bought 1,000 Bitcoin at the first halving, most people could have afforded it. It was $12,000 for 1,000 Bitcoin, and you held on to it, and you sold it at this last top, you would have turned $12,000 into let's see, how much is that? 120,000 times 120 million. So 12,000 to 120 million. That's 10,000x. I can't think of any investment that come close. Now, obviously, you would have had to pick near the top because it was over 120 in July and in August and September, and then finally it popped in October. We had multiple times to get out. My thesis in terms of timing the markets is you're never going to get the exact day correct, although I've done that, I think, twice. But if you're able to at least recognize the seasons and get out within 20% of the top, whether early or late, and then get back in the bottom within 20%, historically, that's given you about 4 times the results each cycle. So your 1,000 Bitcoin by the next cycle becomes, I'll let this go, becomes 4,000 Bitcoin. And then the next cycle, it's 16,000 Bitcoin. In the next cycle, it wasn't quite 4x, but still 60,000 Bitcoin. So same scenario, you bought for 12,000 and you sold near the top, at 120-ish, 120 times 60,000 Bitcoins is like, $7 billion. Even if you didn't sell and you're just looking at what it's worth today, it's still going to be like, almost $4 billion. So it's exponential now. I don't think we're going to go and have 4x for the next 4 halvings, but I think that we're going to probably have 2x. If you sold at the top and bought back at the bottom this time, if the bottom was in, and you sold 20% from the top, you would have basically sold at about 100K. And then if you bought in within 20% of the bottom, you would have bought back at about, let's see, what would that be? About 70K or something like that. No, yeah, about 70, low 70s. So, that gives you not quite double your Bitcoin, but pretty close, right? 120 you sell and you buy it back at the 70. It's almost 2K, almost 2x, 1.8 or something. And then, so if you're able to go and do that again the next time, I think the next time, and again, that's presumably we're already in. I think that we're actually going to go lower. So if the low is 50 and you ended up like getting in around 60, then you'd be exactly 2x. And I think next time we're going to be similar because I think that we're not guaranteed to clip the market short. We've had 2 cycles in a row now where we dramatically underperformed what the diminishing returns would have said. So my thesis is that we're having logarithmic diminishing returns on every cycle as we get larger numbers, but arithmetically diminishing losses. So your first cycle before the halving, from the first quoted price of Bitcoin, the first sale, which was 5,050 Bitcoin for $5 on PayPal, it was Marty Malmy, who's Satoshi's intern, the guy that helped him as a college kid build a website. He sold 5,050 Bitcoin for $5 on PayPal. Wish he had it back, right? And he then sold 50,000 Bitcoin to buy an apartment. But, obviously not a true believer. If you went at the 1/10 of a penny price, the first sale in 2010, to the high of that cycle, which was $30, that's 3,000x. It dropped to $1. So it was 3,000x, not percent, 3,000 times the bottom to the high of the pricing there. And then it dropped 97%. After the first halving, it went up 100x, $12 to $1,200. And then it dropped 87% to 170 something. And then, the next halving, it went up 30x. And the macro I would suggest was neutral because, you didn't have like great tailwinds, you didn't have great headwinds. By the time you got, so for my estimates, it should have been like, well, we're 3,000x, 100x, 30x. What's the next net sequence? 10x, log sequence, right? So I was projecting that when we had an $8,700 halving, that sweet spot would be 87,000, a really good shot if we had positive macro to, which I thought COVID might give us, that we get over 100. Laser eyes, all that stuff, right? And instead, we had negative macro because of Biden's war on crypto, and Gary Gensler and all that. And then, just as importantly, the rapid rise of interest rates really, crushing the monetary supply. So instead of getting 10x, we got about 8x, and we went to 9x by the end of the cycle when we had the little ETF blip. So this time, I was projecting we do 3x. 3x to halving would have put us around 190. And, plus or minus macro, which could be 20 to 30%. And we ended up having, everybody thought we'd have positive macro. We might have, 250. I thought it was certainly a possibility. And instead, we had negative macro because the tariffs scared the bejesus out of everybody. Anytime we had a rally going up, tariff, and the market sold off. And, so we'll see what happens this next time. I mean, if we have neutral macro and no super cycle effect, next number on that scale is like maybe 1.3x, 30%. That's not very exciting. That's less than typical stock is going to go up and down in a year. right? So in other words, you
It's not comparable.
let's 4 years. So under that scenario, if we have having it say 120, we would get maybe to 100 and, 60 by the top, and then drop a lot. So I think at some point we have to have a super cycle. The super cycle gets caused by supply shock. So you have one God candle that comes in when everybody wants in crypto, and it hits 100, it hits 200. Oh my God, we got to get in, and so that's my thesis in a nutshell.
I love it. Yeah. Thank you so much for this feedback, and I really respect. I love the fact about the cycle strategy because I'm probably heard about Greg Braden. I have a lot of respect for this searcher. Also, he talked about the 66 years cycle where he divided and he associate the economy plus nature and human connections interaction based in the economy cycle. Yeah. So Michael, you're speaking.
Well, different cycles, but yeah.
There's different cycles. Yeah, absolutely. But the base is similar, and I like the fact how you calculate it. Data, it's well done. Never lie. That's my belief. So you're speaking, Michael, to our Montreal event in August 21st, Bull Run Blueprint. I'm really excited. If you had, I know you shared a lot already, but if you had to distill your blueprint into one non-negotiable rule for, let's say, maximizing this specific cycle, what is it?
Well, recognize it. Recognize that there are there's so many people. It's funny, when I wrote the book, they said, well, it's going to change the cycles. Everybody's going to realize that there's cycles and that'll affect the cycle. I go, no, most people are going to ignore the book and say I'm an idiot and say, no, I have my own theory. And that's happened, right? I mean, I've been on all sorts of panels, people saying, oh, no, interest rates are more important. No, institutional adoption is more important. No, the cycle's dead. I mean, I was speaking in Hong Kong at Consensus Asia, and then a couple months later, I was speaking in Miami at Consensus, the global conference. I was the only one saying that we were still going down, that we were in a bear market. Everybody else thought, nope, institutions, always up. We're going to be $250,000 by the end of the year. And they were wrong, and I was right. And so I was based on math, and they were based on new theories. So everybody likes to have new theories that are not based on data, and or based on the wrong data. You can was Mark Twain, who's the person who said, history doesn't repeat, but it tends to rhyme. He also said there are 3 types of lies, damn lies, and statistics. And you can take certain statistics and be fooled by them. And so you have to make sure that you're looking at the right statistics. Or in my case, I look at about 40 different things, and if like 35 of them are matching up, I'm pretty confident of the thesis.
Which is really strong. And you have a track record for early entry, like Ethereum, to give an example of Tether. So beyond the current noise, which emerging sector do you believe is the most undervalued today? Like, is it decentralized AI, Terpin? I'm curious.
Yeah, the one I don't know, I would say that I do know one thing, which is most altcoins only last one cycle, at least in terms of you being able to maximize profit. Whereas Bitcoin, if you miss the top, it's going to be higher 4 years later. And that's been every time so far, and I think it'll be that way for probably another 20 years at least. It'll only start moving down when we've maximized the number of people using Bitcoin. And I think we're a long way from that, particularly since, you now have new users that are using it through ETFs. They're using it through ownership of DATs. And what other tools we have in the future that I think that in the future we'll have a lot easier way of, embedding real Bitcoin, not financial wrappers that are hypothecating Bitcoin, inside of, whatever the Lightning Network's going to evolve to, whatever, all the people who are working on like Bitcoin DeFi, that, so far has been kind of a failure because they just haven't gotten the right, token economics around the wrappers, around the layers, et cetera. But I think they'll solve that at some point, and you'll have, non-0% of the economy using Bitcoin as a financial instrument for yield. And and as that grows and as the store of value continues to grow because it's continuing to beat gold and silver in the stock market over a multi-year period, that'll keep on going. With altcoins, every single cycle, if you're going to make money in altcoins, you follow a cycle, you realize when there's rotations, because it's not exactly the same cycle for altcoins. You typically will have sometimes Bitcoin being flat. This has happened a number of times, and altcoins go crazy. But usually it's just a cycle, just a part of altcoins. I mean, this last cycle, there was a period where Bitcoin was just really flat around 60. The meme coins were going off. Another time when it was also, I think, around 60, and the privacy coins were going off, right? And that's the rotation. That's where people who have both a lot of Bitcoin and also are playing the alt game are like, kind of bored with Bitcoin right now. It's probably, it's middle of the cycle. It's probably not going to go anywhere really fast. Let me go and pump something else, right? And, people with a lot of Bitcoin can play a lot of games. And TradFi has learned how to do that now too. And they're masters of playing games. They do it better than the whales. And so, that's really that's the unpredictable part of this. But that's what markets are. Markets are never completely predictable. Otherwise, they'd be flat.
Absolutely.
T-bills are relatively predictable because they don't go up like and down like this. But and they're very systematized, and you got to wait for what the Fed says, and they'll go up a quarter point, down a quarter point. So, and that's why they're considered, risk-free return. But, with altcoins, I think that if you're going to play the altcoin game, like say you're 80% Bitcoin and 20% altcoins of your crypto allotment, or you're young and you're YOLO and you're 50-50 or 80-20 in the alt size, you have to recognize that unless you're a meme expert, because they seem to come back every cycle to some degree, that you got to realize what the predominant narrative is for that new cycle, because it's always different. The first cycle, Genesis block to 2012, there weren't very many meme coins, and the narrative was find something with fairer mining, because by the end of the cycle, home miners really didn't have a shot at doing Bitcoin. You had to buy, these ASICs, right? And typically people aren't going to buy ASICs if they're used to like mining on their laptop before, and then maybe putting a GPU in. And now all of a sudden GPUs are getting crushed, but you can still GPU mine Dogecoin. You can still GPU mine, Litecoin, right? And Litecoin was the number 2. It was like the Ethereum of its era. Nowhere near that now. And so that was the narrative there. But if you follow that narrative and you just kept on following the cycles up and down for Litecoin, you wouldn't be you would have lost most of your money. But if you sold Litecoin at the top and then decided what's the next narrative, which it took a little while to figure out what it was, but the buzz was something called Bitcoin 2.0, which is new platforms that will compete against Bitcoin. And the first, of course, was, the first was probably Waves. Waves was one of the big ICOs in that 12 to 2016 era. That was not on Ethereum. That was pre-Ethereum. What else? There's a couple other ones that were sort of in that, but the Ethereum was the one that really took off. And Ethereum had its crowd sale in 2014. It then shipped in 2015. Crowd sale was at 30 cents. Went out around 70 cents and kind of fluttered around $1 for a while. And obviously by the end of the period, it was still around, I think maybe, the end of 2016, the halving, it might have been around like $5 or something. But 4 years after that, it went up to 1,300. So that's when it had its big run. So, you would have done well in that second one, buying Ethereum and some of the other early ICOs at the crowd sale, and then make sure you sell by the time that, the peak of that cycle happened. And then the next narrative is you could have bought back Ethereum even lower. That next one was the ICO wave, right? And so Ethereum, you may remember when they were talking about the flippening, Ethereum was going to be bigger than Bitcoin. Never came close, but a lot of people believe that. And Ethereum was the one that powered the ICOs. And, you did extremely well back then. I mean, I did. Just, buying anything with a good team and a good narrative. And if you could get it at the ICO, you often triple your money in a week. And if the winners you could hold on to, and they'd be like 100x in a couple months.
It's the best
And
ever.
so that was crazy times. I think the reason why I went up so high was, everybody bemoans regulation, but, a certain amount of regulation is fine, like knowing who's actually buying it. I'm sure there was a lot of, dark money that came in, since all you had to do was go and throw Ethereum at an address and you got it. Was there a lot of North Korean money? I don't know. I don't know if anybody's really analyzed that. But there was a lot of legitimate, like, crypto people just, flipping, right? They'd go in, they'd buy an ICO, they'd flip it for 3x, they put the same money into another ICO, and, and it was crazy times. I mean, and so, but you don't want to go and hold on to that narrative. The next cycle, everything crashed. So you were best if you got out, Bitcoin and end of when the bubble popped in December of 2017, and then the altcoin bubble popped in January of 2018. You mentioned my SIM swap that happened right as the bubble popped.
Yes.
So it was distracting to me. And then Ethereum popped, I think, in February. So, your proper move was sell your Bitcoin in December, put it into altcoins, ride them up, and then sell them at the top. Although they'd already been ridden up pretty high, you could have sold your alts and your Bitcoin in December, and then put Ethereum and then sell that in February, and then go cash or S&P or whatever is liquid, so you can get back in at the bottom, which was a year later. And again, my thesis, sell at the top, and 1 year later you can buy a lot more in the bottom. That goes with altcoins even more so, because Bitcoin might drop 60, 70, in the early days 80%. Altcoins to this day will drop 90, 95, 99%, right? And so if you're holding on to, waves, the whole time since it was hot stuff in 2016, it's like, it's almost nothing now. And so you got to go to the new narrative, and the new narrative, and, the let's see, the first cycle was better mining. Second cycle is Bitcoin 2.0, better, blockchains. 3 was ICO which was better applications or innovative applications with no VC funding. And then 4, the fourth cycle was, that was 2020 to 2024. That was NFTs, baby. NFTs, DeFi. We forget that DeFi was only really came to market in 2020, right? It's not that old.
No,
And
that's true.
that's when Uniswap came out. That's when the YFI.
Swap. All these swap.
Yeah, I mean, these guys were tiny back then.
That's true.
And the third one was the metaverse, and only one of them survived in any meaningful form, which was DeFi. But even there, you would have been better off selling at the top of the 21 bubble and then putting it into cash or the S&P, and then buying, back new coins. Uniswap, Chainlink, he probably could have bought back in the bottom and done okay, but not as good as rotating him into the next wave, which so far this cycle, 2024 to 2028, has been AI, decentralized AI. I think DeepIn was sort of last wave. I don't think it's...
That's true. That's true.
Yeah, 2016 to 20, or rather 2020 to 24. So I think AI was definitely this cycle. DEXs, particular DEXs and perp DEXs, Hyperledger was certainly this cycle.
True.
And privacy coins, the return of privacy.
Right.
Those were the big 3 narratives. So what's the narrative going to be for 2028? Well, we got a couple years to find out.
Yeah, we'll see. Everything is moving fast, and
I think there'll be some new things. I think that AI will probably have a new wave of things. I mean, I think right now the big winners in AI are my friend Eric Voorhees with VVD and Tau. Right, those both are top 100 tokens, and they came from nowhere. And they have functionality. They've got community, and that's what you look at any alt. It's got to have not just like a lot of bot Twitter followers. It's got people actually using it for something.
I love what you're saying. And this is the biggest challenge we have today in blockchain and cryptocurrency, right? So real world asset and real usability, real utility. And that is a subject I'm passionate about since 14 years now. I dedicated my life for intellectual property, and I would love to get your opinion in financial way, right? So AI, like you know, is creating massive provenance today, problem for inventors, because AI is able to create by itself. And protocol like IPE terminal, which is like the Bloomberg of patents or non-fungible patent, are trying to build a verifiable record for intellectual property. So the point here, Michael, is IP genuine new infrastructure category for crypto. Like we take a fraction of intellectual property, existing patent generating revenue, we fractionize it, and we generate this possibility to invest in a fraction of an IP.
Well, these are tokenized securities, though, right? They're securities; they're not commodities. And the SEC and the CTOC finally agreed on what's a security and what's a commodity, and the Clarity Act will hopefully put it into law instead of just policy, because policy can change. If AOC is the next president, she could just wipe it all out and put Elizabeth Warren back in charge of burning everything to the ground. But if you have the Clarity Act passed, then it's a law, and you literally have to repeal that law, which I think it's a lot easier to just simply put in your anti-crypto head of the SEC and go after everybody again. Bring back Gensler or someone worse. But if it's a law, then they have limits. And so that's why it's very important that we pass the Clarity Act. And I'm unfortunately thinking that it's a long shot right now because the Democrats, I don't know why it is that you have to get 60 votes to get something through the Senate, whereas you can get it through by one vote in the House. And I guess it's something like, otherwise they just filibuster for the rest of their lives. It's like, fine, you stay up all night for a week, a month or whatever, and see how you feel. But no, I think that if the Democrats take back the House in the fall, which has been widely predicted, I don't think it's a given, but then, nothing will happen in the last 2 years of the Trump administration other than impeachment hearings. Crypto will not be getting any tailwinds anymore. And it'll be sad because, 2028 is also the halving. So we should have a bull market in 29. And if we have a Democratic House, even though we have a, Republican president, a pro-crypto president, it's going to definitely be a macro headwind. Whereas if, by, some, chance that, because right now the Democrats are moving far to the left, right? I mean, they're the socialists, the Democratic Socialists, that was started, by the way, by Bernie Sanders, and it's taken on life of its own. I mean, they're just like they make what we used to think of as being progressive look like centrist now, right? I mean, the defund the police and the tax on anybody who's got wealth, and the free rent for all, and just all these crazy things that are basically communist, if not those experiments are happening now in New York and LA. I mean, I lived in LA for many years. It's really sad to see what's happened to the city, or the crime rates going up, and and people leaving, and they just keep on raising taxes and providing less services and having more crime. So it's a little bit of a tangent here, but I think that if that's the case, then we'll probably have a muted, and we won't have a super cycle probably. It may take the next kind of pro crypto, or at least laissez-faire president to have a super cycle. But there will be a super cycle. U.S. is not the entire world, and at some point, but it does lead opinion. At some point, people are like, geez, this thing is not working. This isn't working. The AI bubble pops, et cetera. Where are you going to put your money? And, Bitcoin is this kind of asset that's most assets, if the price gets too high, you don't want to buy it. With Bitcoin, it's like a Hermes Birka bag. The higher it goes, the more you want it, because it's more valuable, more scarce. And they call that a Veblen asset. I talk about it in my book, that the higher it goes, the more value it has. And that's when you get supply shock, when everybody's thinking, oh my God, I missed out on Bitcoin at 10,000, at 100,000. Now it's $250,000. It's going to be $1 million. I got to get in now. And they buy at the top. And then that helps, pop the bubble, and it gives liquidity for people like me to sell. And so that's, that's sort of the crypto side. But you mentioned real world assets. I thought real world assets were going to be the third, because usually there's three narratives for every cycle, and it ended up being privacy instead of RWA. You had a moment where Ondo did really well. I mean, they seemed like they were going to be a top 20 coin, and they were allowing you to sort of structure your, T-bill purchases and things like that. But really, at the end of the day, where they were kind of unnecessary, right? BlackRock just came in. You're not going to beat tokenizing traditional assets with degens, right? It's just not going to happen. This is Morgan Stanley, the JP Morgan, this is their bailiwick, right? They may not be able to figure out how to build the next best blockchain and to do digital commodities, the next innovation wave of digital assets that are perceived to be commodities or regulated as commodities, but they sure the hell know how to play games with stocks, bonds, real estate, right? That's who they are. And so I think that the whole hype of, the future of crypto being real world assets is just wrong. I think that they're hostage to the traditional, banks who don't want to move very fast at all. And when they do, they'll wait until they're able to control. Then they'll use the buzzword, but it'll still be TradFi. I mean, look at the ETFs, right? I mean, they were all anti-Bitcoin until they could figure out how to make good money on it. Now they're saying, well, put 5% of your net worth into Bitcoin, but use our ETF to do it. Because you don't own Bitcoin at that point. You own a claim on Bitcoin, and they're the ones with the keys. And then the back, they're trading it, shorting it. They're doing whatever they want to do with it. And, I think the same thing with real estate. With real estate, yeah, there's a lot of real estate that could be tokenized, but what value does it add? If you're investing in tokenized real estate, you're not investing in crypto, you're investing in real estate. And the only use case I can think of that's not already there, because we're going to get a bucket of real estate and it's going to pay dividends. Yeah, that's called a REIT. Just buy Starwood, right? This already exists, and it doesn't have any complexities to it. You go on New York Stock Exchange, you look at the PE, you look at the cash flows, etc. And you might have a wallet that shows you the transparency where it is, but Starwood's got very tight audits and things like that. I mean, I don't think anybody's worried that Starwood's going to take off with the money, whereas somebody might be legitimately worried that there's a smart contract flaw in and all of a sudden your dividends end up in a hacker's wallet. So I think that sadly, but realistically, that we got a long way to go before tokenized securities have any major part of the economy outside of what they're already kind of been co-opted by. The biggest tokenized security right now is BlackRock, right? They let you go through the BitAngels token and trade T-bills 24/7, 365. That's a good use case, but it's not like buying Ethereum. It's basically just buying a tokenized security that's controlled by BlackRock. It was built by, my friends, Carlos Domingos, and they just went public a week ago at like $1 billion, valuation for Securitize. And, but they're service providers, basically. I mean, they're a stock, and, same thing with Circle. Circle, was a big, crypto so-called IPO, but they're a service provider, right? They're basically providing the service of using stable coins, and wildly overvalued if you look at other service providers in the TradFi space. So, I think that maybe there's some innovation that I'm missing, and maybe RWA is one of the waves that we see in 2028 to 2032. But boy, it's got to be something that simultaneously skirts the regulations and still provides value. Maybe it's a RWA DEX that doesn't get sort of regulated like crazy. I mean, right now we have something that I think should just be eliminated, and maybe someone will, which is called the ATSs, right? These you can't go and sell private stock. If you're an investor, a credit investor, you can buy private stock from anybody with a napkin, you're considered a big boy, you write a check and say, I'm giving you $250,000 for 10% of your company. But if you try and sell it again, oh, no. You can't sell to even another accredited investor. You need to do it through an ATS. It's an alternative trading system. And that's all regulated and millions of dollars to operate. And, people who tried to go and put it online are like, oh, no, you need to be an ATS. Well, if you're an ATS and you're a blockchain, you're not adding any value. You're not disrupting the TradFi. You are TradFi with a little, blockchain impediment built on top. So that's now they didn't think DEXs would ever take off because, wasn't too many years ago they arrested people for putting up DEXs, right?
True.
And now all of a sudden nobody went to jail for Uniswap. Maybe it was, the influence of Andreessen and Horowitz, and then once they decided that decentralized exchanges were fine, for commodities, I just don't know if they're going to get there very fast with securities. I don't think they're going to be like, yeah, you can just now, you are able to go in and buy other people's stock through like X stocks on Solana. And I'm not sure if that's banned in the U.S. or people just do it through VPNs or whatever. But, there you're not really buying it from the company or from an exchange. You're buying other people's stock that they bought it and then tokenized it. And maybe that's the wave of the future that RWAs really take off. But I think equities are much more likely to lead the way than real estate. Nobody wants to go and buy a fractional piece of your house in Cleveland. And nobody wants
real
to
estate is different.
have a REIT that competes with Starwood unless it does something that they don't, like 24-hour, 24-hour availability and maybe paying in Tether to the third world. That would be something that might be interesting.
Thank you. Yeah, I keep focusing and believing that patent valuation is able to generate revenue because this is secure and measurable asset. But this is another subject.
They already have that, right? Intellectual ventures. Nathan Myhrvold is got like billions of dollars of funding for a fund that does that. So that's not exactly monetizing IP of patents. And, you did have someone who's trying to serve as a gateway, not really a fund or a monetization security instrument, but there is a token that launched this wave called IP. It was a VC coin, as they say. It was kind of a huge portion of it owned by Andreessen and Horowitz, called Story Protocol. And I looked at this. It's kind of a joke. I mean, it's basically you're able to go in and register a trademark, but it doesn't actually register with the U.S. PTO or the trademark. Yeah, it's their trademark to show that you're registered on their system so you can monetize your song or whatever. And it's just like they got a multi-billion-dollar valuation out of, I think, just hype.
Yes, it's really challenging. I agree with you. There is many other projects pushing already the copyright, decentralized copywriting, but legally is not valuable, unfortunately. Yeah. How about psychology, Michael? Like we are ending the podcast. So retail investors today usually lose a lot of money during the peak. And you talked about it earlier. So what is the most dangerous psychological signal you see people ignore when the hype gets extreme?
I would say the most dangerous thing is being on the wrong side of interpreting fear and greed. You should be, I'll give the Warren Buffett quote that I believe I also replicated in my book. Be fearful when others are greedy and greedy when others are fearful. If you look at some of the wealthiest people in the history of the world, they all share the same philosophy. You have to think against the crowd. It's the only way you're going to make money. If all your friends, as they used to say, if the shoe shine boy is giving you stock tips, it's time to sell your portfolio because a crash is going to happen. Buffett has been brilliant at that. I mean, he went and had all sorts of cash when we had the 08-09 crash, and he was able to bail out GE at a really, really usurious price, and he made tons of money on it. He also bailed out Goldman Sachs, right? Goldman Sachs wasn't going to go away, and he ended up buying. When they were at their bottom, he bought them at a discount on that at preferred stock, and they got a whole bunch of options to go and buy more of it when the price came back. And so he killed it, right? I mean, he's just he's a master of basically bottom dwelling. bottom feeding. And I mean, in real estate, they say that you make all your money when you buy because the market will let you sell, right? It's easy to sell stuff. It's not very. It's you make all your money, I'd say, in crypto when you buy as well. But over there, you have to know when to sell, right? And so again, Four Seasons of Bitcoin, just typically the cycle has been that every 4 years we get to a period of extreme fear, and we're in that right now. And that's when everybody's like bailing out, and they should be buying. They should look and say, geez, this is 4 times in a row it's happened. Unless you think there's something broken with Bitcoin, it's a good time to buy in. You're not going to make 100x anymore, but you don't need to do that to beat the S&P. You make 3x, you're doing really well. You make 2x, you're doing okay. I mean, I can't imagine that even if a Democrat gets in, that if you're buying today at 65K, you won't be able to get out at the height of the next bubble at 135. That's only like pennies more than the last cycle. I think that you'd have something really fundamentally broken with adoption. And so far, just the government saying it's bad has not stopped global adoption.
That's true. Yeah. Thank you so much, Michael. Listen, I'm really honored to have this talk with you. I have a lot of respect, and you are an inspiration not only for me, for all blockchain and crypto optimists. So Friday,
realists. I'm not a Pollyanna. I'm the first one to say sell at the top.
You are logic. You are a logic, and you believe in data. And that's what I love.
Yeah.
There is no bullshit here, and that's what I like. So Friday, 21st, I'm really honored to have you in Montreal virtually. Next time I will have you physically. We'll have introduction to the community, talking about Bitcoin, crypto, all these amazing industry changing the world today. We'll have also startup pitching with BitAngels, visibility, some push, and we will start also with this is subject I'm really.
How many folks? Is it an all-day event? How many folks are coming?
We are expecting almost 70 to 80 really crypto heavy, passionate. And
great.
Almost 110, 120 average. This is the global expectations we have for this event.
Fantastic. Well, I'm delighted to speak.
Targeting event. And we talk also mental health. This is super important. So these are two subjects, crypto and mental health, and let's change the world together.
Fantastic.
Thank you so much, Michael. A lot of positive energy. I can't wait to see you in person next time.
Well, I'll see if I can send my head of research. He's actually living in Montreal right now. I'm not sure how much longer he's going to be there. He's a digital nomad. He'll spend a couple months in one place, then go to another place. But he and his wife love Montreal.
More than welcome. I'll be honored for that. Sounds good. Okay, so we wrap up.
All right. Thank you.
Cheers.
All right. Bye.